On Monday and Tuesday, we saw two companies of the growing quality portfolio join conferences, and we got some nuggets from it. Now, coincidentally, the companies we will be talking about today are both my largest and smallest holding in this portfolio. So let's break down these conferences in detail, what meaningful things were said, because I listened to them multiple times and also read the transcript in order to, take out the last details from it. And I will take you through it. But before I start, let me take a second to say that I've seen quite some interest in my video about CELH and why I thought it would drop in share price as much as it did. So I will be releasing a follow-up on that video soon, in which I explain what I want to see from the stock next. In the meantime, however, I am also working on a review of Ulta as I got some questions about the opportunities there. We know Warren Buffett bought into the stock, but at first glance, I don't really see why. So I'm currently working on that, but I still have some work to do on this name in order to give it a fair opinion. But if there are any stocks that you guys want me to look at, just let me know in the comments down below and I will see if it fits my interest and strategies. And I will make a review of it. I will analyze that stock. Now, if you think my videos are somewhat educational or entertaining, please hit the thumbs up button and subscribe to my channel, as this will help me immensely with the algorithm. Now let's get started with the video, because I have been taking quite some notes on both the PayPal conference as well as the CELH one. So let's start off with the PayPal conference. And what we have seen last week is that PayPal now offers a debit card and credit card through Apple Pay. They utilize the NFC technology, which will allow PayPal users to use their credit cards or their debit cards on their iPhones. Now, last week, PayPal already announced this and the expansion of their rewards program. So right now, you can get a 5% cashback up to $1,000 on certain category spend areas. And what we see is that this cashback is mostly selected for both gas as well as groceries. Now, then we got to the start of the conference, and this was highlighted by the new campaign that PayPal is running with Will Ferris. Now, this campaign is the largest US campaign in PayPal history, and this adds to the story of the turnaround. They are more aggressively marketing their new goals and plans. Now, as I already said, here is part of the transcript from the conference. And what we can see is the 5% cashback, and the two top categories that people are now getting rewards on are groceries and gas. And what is so positive about this part is that they say these are everyday purchases that people need to put more money back in their pocket, and there are things that you would never have thought of using PayPal for in the past. Now, this is of course very good, because this means that people are using PayPal more often and, many more times per quarter, which will be very good for the statistics of PayPal. Right now, people use PayPal slightly over 60 times per quarter. Now, if people are using PayPal to pay for their groceries and their gas, then these usages of PayPal will just flow on top of it. So that's more times PayPal used, more total payment volume, and of course, more revenues for the business. Now, then Alex Chris spoke about Venmo, because since he came in as CEO of PayPal, he has been saying that Venmo needs more monetizations. He sees opportunities there, but they are not chased or have not been chased aggressively enough. Now, Venmo grew 8% year over year in the latest quarter, but what was very positive that came from this conference was that they say that they have seen 30% monthly active user increases in Q2 with Venmo, and that they have also saw a 30% increase of monthly active users of debit in Q2 as well. They are trying to streamline the process of the Venmo debit cards into the Venmo accounts, because he thinks that this wasn't done well enough, and they are seeing great responses to it. So then Alex Chris continued to talk about Braintree, because Braintree is the fastest growing part of PayPal, but also one that has been causing a lot of problems for the stock. Now, in the latest quarter, we can see that the PSP unbranded card processing, which is mainly Braintree, grew at a 19% rate. Now, in the prior quarter, this was 26%, and the prior year quarter, this was 28%. So a slight slowdown in the growth of Braintree. but this is very well explained. Now, I can take you through this entire part, but let me just sum it up for you. Because what Alex Chris basically said is that the big growth numbers, they were necessary for launching a new payment platform, a new payment processor. However, right now, Braintree has done a lot to add value. They have meaningful value-added services, and well, the team PayPal, Alex Chris, think that Braintree should be priced accordingly, should be priced to value. Now, these are difficult questions to have with customers, saying that they want them to pay more. However, Alex Chris also says that these are more healthier conversations. Now, then Alex Chris was asked about NFC technology because, well, this was released in Europe and will be released in the US as well. But basically what Alex Chris said is that this is a very useful tool for PayPal, not their only tool that they can use in the future, but a good tool, and that they want to meet customers where they are. Now, in about a 1 minute part of this conversation, he said this 3 times, and over the entire conference, he said it 6 times. So he is really focused on meeting PayPal customers where they are, and the NFC technology plays a big role in it. Now, then we get to one of the 2 main growth stories going forward for PayPal, and that is Fastlane, because they also talked about this. Now, what was really reiterated in this part of the conference was how meaningful Fastlane can be for merchants, how much the increase in conversion rate for guest checkout can be with Fastlane. Now, what he also explained is that 40% of the people that use Fastlane have never had an account with PayPal before. These are all new people, and they will use PayPal, or they will use Fastlane, for their next purchase as well. So this means that Fastlane is actually sticky for the people who use it. And that means it's good for the merchant customers, but also for PayPal, and it's liked by, once again, the consumer. So that is very, very good and very important. Now, what I didn't like so much about this is that this basically was, well, hidden in everything that was said. They didn't really highlight it. They didn't hammer on it like meeting customers where they are. But it is a very important statistic, in my opinion, because it means that people want to use Fastlane. Now, then they went to the advertisement platform that PayPal is building. And, well, in my opinion, this is the second of the huge growth opportunities. Now, I don't think the ads platform will be the next Amazon ads business. In my opinion, it just by far will not be that big, but it is really high margin, so that is very good for PayPal. Now, the reason Alex Chris explains that he thinks the ads platform will be very successful is that we see with traditional ads platforms right now, so say Google, Meta, maybe even Amazon, people are spending more and more money on it because it becomes more and more expensive to advertise there. This also means that the ROI on their advertising dollars is going down. Now remember, with the PayPal ads platform, you will only pay for conversion. That's when you will pay for the ads. Not for showing, only for converting. Now Alex Chris thinks that the ads platform will be very beneficial for the networking effects of PayPal. And what the network effects, it's a type of mode, but I mean, it's the idea that an increased number of users improves the value of a good or service. So what is the network effect here? That is that PayPal operates both sides of the system. They service the customers through their payment processing or whatever, or the opportunity to have a platform to store money. But they also service the merchants, of course. They have partnerships going both ways. Now they have customer profiles. They know exactly what everybody bought. And that means that they can very specifically target people who want to buy something or who have recently bought something. Alex Chris took the example of if somebody buys a tent, well, there's a good reason to believe that he or she is going camping. So maybe they want the walking shoes, or maybe they want a sleeping bag. Now, this is all very valuable data for merchants and PayPal can offer it. Now, he reiterates this part by saying that there's a lot of ad dollars being sent in a sort of, well, general spray and pray type of advertising. It is not targeted. And this can really be changed through PayPal because they have the buy and the payment history, but they also only have to pay for the conversions. So that is really key here. That's why I think a lot of merchants will sign up with the PayPal advertising. Now, what is also really important in this part of the story is that Alex Chris, of course, we know he used to run or basically be one of the leaders of the small business and self-employed group at Intuit. He was the executive vice president and general manager of that part of the business. So he knows what he's talking about. These small businesses, that is really his thing. Okay, so what were more of the general points? Well, they touched on PYPL, but this is not something I really find that interesting because I do not really like it. However, buy now, pay later, PayPal is a really big player in that field. They also talked about the opportunities in AI. And this is a bit more interesting because what Alex Chris said is what I just mentioned in terms of just focusing our energy as well as leaning into more effective ways for us to leverage the business, taking manual labor and manual work out of the organization, putting more and more into automation and into AI. We are very early in that journey. Every organization is at a different part in the journey, and PayPal is just really early in it. Now, we have seen Alex Chris leaning out the business a lot in the first months that he was CEO. And what he is saying is that he wants to do more of it. Now, this might be way more gradual. Just let people leave and not replacing them is an example. I don't know what his tactic will be, but this is one option. And then just replacing those people with AI, which is way cheaper, way more efficient. So that is really positive that he is actively looking to pursue these opportunities. And I think that will be very beneficial for the share price in the future. Now, he also explains that he thinks the assets that PayPal has, the opportunities they have in front of them, that they can do so and grow this in a profitable manner and therefore return a lot of share or a lot of cash to shareholders. And this means that they will do a lot of buybacks. This will not come in the form of dividends. This will be buybacks. Now, in my opinion, this has two main reasons. First, you don't have to cut a dividend. And second, you don't have to grow the dividend. Because when you initiate that dividend, investors want to see it grow. You cannot really stop it. Buybacks, you can say, okay, we've done a bunch of them. The stock has run up. We're going to slow down on it. We're going to use that cash in a different way. If you pay a dividend, investors want to see it going up. And you cannot just cut it in order to chase another opportunity. So putting it in buybacks, I think is really good for now. I don't want to see this company pay a dividend. Not in the foreseeable future. So then just before we go to Celsius, overall, I think this conference was clarifying. I don't think they really said that much new. And we can also see that in the share price. Because as you can see, this was basically Monday. The share price did nothing. The stock didn't go anywhere. It dropped when the conference started. This is really normal. And then it just bounced back. Nothing happened. Yesterday, the stock was down slightly, just like a lot of things in the markets were. So nothing really happened because there was nothing new explained. Now, we did get the 40% number for Fastlane users who have never been part of PayPal. And we also saw the most chosen item, 45% cashback, is either groceries or gas. So that is good, but then that's not all too surprising, I guess. So overall, just positive. It adds to the bull thesis of PayPal, to the turnaround story, and towards a better future for the stock. Now, they also mentioned, because they tried to pull out a long-term growth rate from Alex Chris, and he said that if they have a growth rate that they expect to maintain into the future, that they will organize an investor day and explain it to all the analysts and get their questions. So I think that is very positive, and in my opinion, this is most likely to happen towards the middle to end of 2025, because they say that 2024 is a transition year. The business will be up and running by then. Most step plans will be initiated, and they have a good sense of where things are going. Now, the question mark then may remain the ads platform, but all other things should be up and running by then and by some time, in order to have a sense of where those platforms and those initiatives will be going. Okay, so then we have Celsius. Now, last week we also had a Celsius conference, so I don't have that much new information, so I want to go through it, well, slightly quicker. But the good thing, at least from this conference, was that we got this share reaction and not this one, because this stock chart is just straight up painful. This looks really painful, because if you have been buying Celsius after May of 2023, you'll be in the red. It's that simple. Even if you bought in anything over the prior period in order to dip buy it, catch the falling knife, give it a name, you'll be in the red by a large margin. By large, I mean like over 10%, because the stock is just dropping this quickly. Now, I do think there will come an end to this vicious downtrend, basically. I think the stock will turn around, but it will have to bottom out first. This won't happen overnight. And I can explain why I think so with this conference. Because while they went into the 100 to 120 million that Pepsi is ordering less this year compared to last year, once again, they started with it. And they say we don't manage the inventory as much as we wish we could. So that's up to them. So them is Pepsi here, of course. And basically what Celsius is saying that, well, Pepsi bought a very large initial inventory. And they are, well, leaning that inventory out. And with Pepsi being about 55% of their North America revenues, well, that's just painful for the stock. They recognize the revenue from Pepsi as soon as it leaves, or the cans of Celsius leave their factory. I mean, yeah, if your largest customers decides to order like 2/3 of what they ordered last year, that's painful. Now, there was a lot of positive news in this conference, because last week I think they mainly focused on Pepsi, and they said with this conference, okay, this news is out now. Now we can look at what's positive and what's good, because there is a bunch of good things out there, but we'll just have to see how we get that in front of analysts. So one of the first things that I thought was really, really important is that they said that the growth rates year to date, the sugar-free or the sugar category is down 4%. Sugared energy drinks, that as a category, year to date is down 4%. But at the same time, the sugar-free portion of this category is up 7%. So you see a difference there. The sugared part of the category is shrinking, but the sugar-free part is increasing. Now, this rolls perfectly into the next part, which is where they say that they are the number 2 player, the well-established number 2 player in sugar-free energy drinks. Now, what they say is that they hold about a 25% market share in the sugar-free part, which is growing instead of the sugared energy drink category shrinking. Very important. Now, what they also explained is, well, in my opinion, very important for the future growth of this brand, is that they pull new customers to the energy drinks category. The new customers for Celsius are not people who leave Red Bull and join Celsius or leave Monster and join Celsius. These are new people to the category. So it's not like these customers used to spend $1 at Monster and are now spending it at Celsius. They are coming from different types of drinks and trying out Celsius. Now, once again, they acknowledge the issues that the energy drinks category has been facing in the most recent months. But they also say that this is a bit of a shifting dynamic within the drinks industry. Because they say, I know dehydration just had a nice couple of month run, but if we had spoken 4 months ago, that was a challenge category, right? So basically, the challenges are flowing through the categories, and I think this is quite normal. But they also say that the energy drinks category has been the jewel of the drinks segment. Now, they then went into the promotions, because this is, well, once again, quite an important part. And they say that the competitors are running lots of BOGOs, and that, well, Celsius is basically not doing them. It's very rare for them to run BOGOs. Now, what are BOGOs? BOGOs are, well, sales promotions, but it's a type of promotion in which an item is offered for free or at a reduced price when another item is purchased at a full price. So, what will most likely happen in the beverage or the drinks category is just people handing out drinks on the streets in order to, well, to level up the brand awareness. Now, it's very important for them to clarify this because most analysts follow the Nielsen data. And what they say about the Nielsen data is that they track promotions different than the Circana data that Celsius uses. Because when you have an off-the-shelf display, Nielsen counts it as a promotion, while Celsius or while Circana doesn't. And as Celsius explains, they are over-indexed in off-shelf displays by quite a bit. They say they are on par with Monster and Red Bull as far as display activity. So they get the sort of promotional boxes off shelf. And Nielsen counts this as promotion. But if they don't discount those cans, is it really a promotion? It might be, but not in terms of revenue they can create from it or sell through for the store. Now, Celsius also touched on their expansion plans. And well, for now, this is mostly in Europe, but they explained how they went from the fitness industry, the gyms in the UK, to now Tesco's. And that they want to have basically an exclusive launch party. Because that means that they will only have to focus their marketing on one supermarket, one place of sale, or one point of sale. And this is just way more efficient than trying to scatter their attention. So I think it's very good from them that they have a playbook for this. But this is also what I said last week. Now they also announced that they mentioned that they will have more announcements coming soon. So probably more expansions coming and either in Asia or in Europe. Now they also announced to expect more noise or continued noise during Q4 of this year. So that is not all too positive. And they also refused to give a guidance during this call or this conference for Q4. But that makes sense because, well, first of all, a lot of things are changing right now for the business. But also, the conference is not a place to give guidance for the coming quarters. It's just not. That's what the earnings calls are for, or the earnings releases. So that they don't, or they refuse to give their guidance there, that's only makes sense. Now, after Q4, they do expect the business to return more towards the old trends. So they gave an example of Q2 that was 52% gross margins, and they expect to go back to those numbers again. But for now, they will have to sit out the noise, see what Pepsi is doing, which they can't influence all that much, and just take a back seat and see where the markets take them. Now, there was a bit at the end where one of the executives slipped a bit in what he said. Because if we look at it quite literally, the question was about if Celsius can go into markets or if they are prohibited from some things by Pepsi. And they said, I don't know what we have publicly disclosed as far as that. They do have some partnerships that will preclude maybe certain areas that we could get into, but I don't think it's really blocking us from anything that we would be looking to get into. Basically implying they are looking for other things that they want to get into. They want to diversify the business a bit. Kind of what he was almost gonna say here. Maybe I'm speaking ahead of what he was saying, like filling in the blanks too much, but that was what it sounded like. And that's, in my opinion, also what they should do, because they are now a very focused company on one thing. And it would be good for them to diversify a bit of their revenues. So they are not as dependent on Pepsi, on their cans of energy drinks, but they have more lines of business where they can stabilize it a bit. Now that's not for right now. I think they have great momentum behind the energy drinks, and I think they should pursue it. But it may be something for the future. And if Pepsi is prohibiting them from a lot of things, I mean that's not ideal. But we will get more information about it in the future. And I think this conference really highlighted the positives that are still in the business model for Celsius. I think it's very easy to overlook them right now on the overarching issue that Pepsi is ordering way less inventories. But there are positives out there. And after this conference, I did go ahead and I bought some shares of Celsius. Now, I don't think we are fully bottom out yet. I just don't. But we know that markets are forward looking. So if they say we expect some issues during Q4, but after that we think it'll iron out and we will get more stable again, the markets will pick up on it. And when we get more clarity about the two big main question marks in the markets right now, which are the jobs, so for a recession, and the election, then I think Celsius may make a comeback. Now, this is not guaranteed, of course, but I think they can do so because the trends are just in their favor. They're just going through a rough patch and they get everything at once. So that's really, really working against them. But with that being said, if you've enjoyed this video, if you have learned something, if you thought this was educational, please make sure to subscribe to my channel and hit that thumbs up button because it really helps me. Like I said at the beginning, it really helps me with the algorithm. And having said that, thank you for watching and I hope to see you in my next video.